Good afternoon, traders. Welcome to Trade Setup in the live stream for the 6th of December. Okay, one more day closer to Christmas. I hope we're all looking forward to that, ready to go, whether we're taking up holidays or we're just looking forward to the Christmas spirit, Christmas eating, I guess, and the Christmas eggnog. Anyway, I hope you're doing good. We'll take a look today. We've got a suggestion. It's by Paul. I don't know if he's listening today or he will be listening today. He may not be able to make it, but he's got a suggestion to pretty much do the opposing view as a discussion topic for the day, as we did yesterday. Stocks that are actually gone quite hard, and how do we combat that, and how do we look at times to get out and try to maximize profit? So what we'll do, we'll go through that today. We've entitled it "Stocks that have run. Is it time to bail?" All right, so I'll go through what we look at and give you a few examples. Just got three on the go here to quickly go through, and then anything anyone wants to go through, just put it up in the chat. Or send through, even if you've got a chart, you can send it through to support@tradesetup.com.au. Now, I know we've had a few issues with the Trade Setup app. There's been a few issues with the Apple. Now, what do they call it? I always forget. Anyway, something, a certificate or something like that going through. So it's just having a few problems with the push notifications. So a few of you who may be coming on now, or maybe just a bit late, because we haven't got the actual push notification on the lock screen at the moment. But if you haven't subscribed already to the YouTube channel, yeah, subscribe to that, and that will give you a notification also that we're going live. Every time we press live stream, we start streaming, you'll get a notification also from YouTube. So that should help sort out any problems. Yeah, sorry about any inconvenience. We'll get that sorted out as soon as possible. Yeah, we're just working on fixing that now. IT guy's been up all night, so if he's listening, you need to sleep, I guess, or have a few coffees. Anyway, let's get organised. So we've got our live stream, all our data up there. You can see on the screen for the trade setup. You can join us on Facebook, go to Twitter, or just join us on YouTube as well. And there's the details up there. We've also got our general advice warning. Have a read through that. We don't give any specific advice. What we discuss and sort of our techniques for trading and all things like that. Just our own views. So anyway, let's get started. Let's take a look at the market overnight. Now, let me just get rid of that. Sorry, minimize that. All right, we've got the ASX 200. You can see that pushed down yesterday's trading session. Really low. Finished on its lows. I think it was down 30 to 40 or so on the day. Did try a bounce sometime during the day towards the end of the session, around 2 to 3 o'clock. Did try to bounce off those lows and then just sort of push back and then opened again when we opened the night session. Opened down towards those lows, sort of retested that zone and then bounced up through the night, through the European session, through the US session as well. We had the US opened up, it closed up quite strong. And you also had, I think there was a bit of, I guess, a bit of scaremongering about this Italian, I guess, what was it, referendum. So they were looking at it as a Brexit too, potentially, but I think the market was well prepared. You can only get caught off so many times in the market. Well, the market will only get caught off guard so many times before they learn the lesson and then prepare for it a bit better. But there was really no shock to that to the market last night. A bit of movement, but it really took a few minutes just to contain that and then continued on. So the US was actually strong. We had the euro bounce as, I guess, a bit of negativity going into that referendum, the Italian referendum. The euro sold off, and then pretty much when it came out, they banged straight back up again. So they gained some ground. We had the DAX was up quite strong, over 150, 60 points, thereabouts on the futures. They closed up, so they had a good session. FTSE didn't so well, up slightly, but only about 15 points in the futures, not too much. So yeah, looking good. We've got obviously the market, it did push up and we've opened up. We did wash out that low at 54.32 or that zone in there on the ASX 200. Did wash it out down to 54.23 and then pretty much we're bouncing back at the moment. So be interesting to see if we can just sort of keep going through these highs and continue on up to 54.70 and then start targeting if we can build some higher lows and work our way back up to 5,500 and through that level there. So if we just go through, let's go over the ASX. So looking at the daily on this chart, so quite a positive day at the moment, up 50 points. So that's quite good. So it's the intraday. Yeah, so the intraday on here, it potentially could roll over from here. You've got the XJ. It's getting a bit stretched up at this sort of 54.50, 60 zone. 54.50, sorry. It is looking a bit stretched, but the dailies, it could just be edging lower, and then we build a high low and then go. But the key level, I mean, if we start pushing down through 5,300, we expect, say you're taking this leg from 53 up to 55 or just above, that little minor leg there, looking at intraday basis, you get a bit of contraction, maybe a pullback 1/3 to 2/3 of that leg. So somewhere around, 53.50 to 5,400, which you just touched below 5,400 yesterday. You expect if it's a pullback, just a pullback to sort of that zone and then pop up through 5,500 and just continue on attacking up towards 56 and above. We'll see how that goes over the coming days, weeks. So we won't bother with the Aussie. I don't think there's a lot of action happening on there. We can take a look at the US quickly if you like. Otherwise, we can just jump straight into it, straight in the topic of the day, and just have a look at that. Let's just quickly, while we're waiting for everyone to catch up, let's just take a look at some of our stocks that are going. We've got Galaxy going well. We're looking for that to push back up through 47.5 and see if we can take some highs. We've taken a partial exit on that around the 47 mark, 46.5. So that's quite good. Happy with that. Locked in some gains on that, and we've got our risk. I can never remember where we've got our risk. I think it's pretty much just above break even. So that's still looking good. What else we got? We've got one we were looking at for a while, but you can see that volume's quite low. But that technically looks really, really good. That's ESR. Stellar Resources, so that looks like it's going to continue up and through 6, but we'll see how that plays out. What else do we have here? SLR still, we've got an entry, I think, through 57, 56, there about, did pop up towards 60. We're looking for it to hold a high low around this zone and then push back up through 60 and attack 65 and above, but if it doesn't, then okay, it's all over for that one. But yeah, so far so good. Market's quite positive. You can look at DCN today. I think they have a capital. What was it here? Placement. So that's really drawn down on the share price there. All right, so let's just jump into it then. We probably have a few less people on today purely because of the problems we've been having, but we can still. Anyone, if you're watching this later on and you do have some questions after we finish the stream, if you're viewing it later, just send through the questions to support@tradesetup.com.au. Send that through and we'll get back to you as soon as we can. All right, let's get into it then. What we want to have a look at and what we're trying to key in on today is how do we treat stocks when they're going in their favor? If we can just get up one, for example, this is one we're going to talk about. I'll get it up on off a different chart. It's Galaxy. As an example, something that's gone quite hard, and you can see that it's looking to get a bit stretched. How do we treat that? Do we just hold it and hopefully it doesn't reverse on us and we get another chance for continuation, or how do we sort of combat that? It's a good call by Paul to discuss this, I think, because we have a few different ways that we view it. I guess it depends on a few different things too. You can't just, it's a case by case scenario. I guess you've got to treat each stock and what it's doing, what you're seeing on the left hand side of the chart, what sort of price action you're seeing, where you're headed. Is it in blue skies, clear skies? Is it going up into a resistance zone? Has it had a bit of a pullback and consolidated and gone, or is it a straight stretch up into a zone? So we obviously take it a case by case basis, but we've got a few techniques that we use, and I guess one of them is really just to see if it's gone quite hard. As always, treating your position or your move as two positions, just taking some off and then letting the rest run and see how you can go and see if you can pull a bit more out of it. Sometimes it can turn and reverse on you, which we've all had, I guess. Which is not great, but because you can always look at and kick yourself for not taking it all off. But I mean, that's the name of the game. You want to give yourself the opportunity. Well, let's just go through it. Give yourself the opportunity to actually get as much out of it, because you never know what's going to happen. You never know if this is going to be the one that's going to go, or if it's just going to turn around and close out on you. Let's start off this one. CKF, Collins Food. This is one that we've got in a tad late. I'll draw it up in a second. We've traded this a couple of times now. I can't remember. I think we got in originally, was down in this zone. If we just draw that up. we got in down at this zone, and then we got that push up to, it was at $5, and then it fell over. We took some profit on that. Did miss it through here, which would have been a beautiful little entry. And you can see the price structure that's just worked out on that one. If you just take it across the tops there, you can see that with that breakup that we originally got in, you got some contraction back to the MAs, which is always a good sign too. But then just from there, you just want to be looking for the entry. You got a good strong push up towards that $5 mark again, 5.10, and then it just made that higher low, which was nice. Sorry if we can just see that just in there. That higher low there, just drill out there. So made that high low, then push up through, and when you can see it touch on there again, another high low as that spike lower, which was rejected, and then you eventually had that push up through 506, I think it was 505. Would have been a perfect little entry up there, and then you got that big. It's taken advantage of that really accelerated move higher, and you can see all this contraction, and the whole time it was just building some higher lows. You can see that that's the type of price action we want to see. And when you got that original push up, and that's what I guess we've talked about quite a few times, it's starting to push out of that contraction, and that's quite clear. You know, if you're drawing your lines down there, Susan. Yeah, we not always, but we like it. For me, it's just once it does break. I guess if people would say that, Susan's question, do you always enter on the break? Yes and no. It just depends on I guess the price structure. Like this, for instance, if you entered on, well, we entered through there. I think it was that little push. That is a break, but in context, this little move down, it's not a break of the overall move. It's really just preempting that this is holding. It's starting to show signs. We're getting confirmation. Now that it's all about confirmation, I guess, the way you enter. Is it confirmation that it's turned around and heading higher? You can see in this zone here where we entered previously, you've had that push down. It's starting to build those minor high lows. You've got this candle which opened up and did push down, but it's just taken out some minor previous day's highs. And then you can see it pushed up. It's come back and it's just sat around this zone for quite a few days, holding another high low. So we were happy once it broke up through the confirmation that's building those high lows. We're going to start attacking at least this high, this previous high at about 475. That was the thing is with that trade there, the thing about that, it was a bit preemptive that we got that longer term. We could just be stuck in contraction, trade up to that high, 481. But again, it's just assessing it on a case by case basis, what's happening there. If we do get, if we do touch up on that resistance and just roll over, we're still up on the trade. And that's the name of the game. If you're trading it closer to that zone and you're trading a breakout and your risk has to be raw all the way down, it's probably not the best. It's just assessing it a bit differently. Whereas you can see this contraction coming off that base, off that support, that's building a potential higher low. We're willing to take the risk reward that it's going to pop up, even if it just holds, because you've got confirmation that it's actually starting to push higher. And then it's starting, it's holding support at the very least. Now, if it holds the resistance again, then okay, we've got a profitable trade. But it's just like I said, just taking a case by case basis. Whereas this one here, for me, the context of this overall trade, it's definitely coming out of contraction. And we're always looking, and I guess that's the idea, especially with the stocks, with pretty much anything market. If you can identify a contraction zone, as in the case of CKF, Collins Foods, I think this is called. In this case, you can see that it's quite clearly in contraction there, and we want to take advantage of when it's going to continue that trend higher. We're getting some contraction a bit lower, building some lower highs, but buyers are still happy to step in. We can see that by the higher lows, and we want to always try to get the market when it's pushing out of contraction into expansion, because that way you're not just sitting there buying something and then just have to sit there for days or weeks, months, just holding something that's still consolidating, because you don't know how long that's going to take. You want to take advantage of those sharp moves, and that's what we got there. We did get a good little profitable trade, got washed out there, and then we got back in at 37. So anyone can see that's a tad late. We got in, I think, through this zone. So that was our entry. It was a very tight risk at the start. But yeah, just remembering that that's just breaking above this high as well. So in context of what's happening, you're just seeing that push through. We were happy to take that risk that it's going to break through and continue, because I guess you can see the legs there. If you can just move that, there was quite a bit of fat in that trade. So it could have, we're expecting that lead to project up and through and continue on through 37. So doing well. So this is going back to our topic. this one we're long, and what we really want to assess is what are we doing there? What's going to happen? Are we? Is it time to take some? Especially you're seeing that as it pushes up higher and higher. We were actually discussing this, I think, yesterday. Susan and I, we had a chat yesterday about something else, but it's this same type of move. Um, it's that same thing. You want to try to project. I mean, it's hard. I think on CKF, it's actually. Let me just go back to the other. I think that's the all-time highs. So it's slightly it's that different price action that we've mentioned. CKF. Yeah. So with this one, it's in new highs. So it's always good. I mean, trading something in new highs, you've got no resistance zone. So you've got to. I always like to have an idea of where it could be heading, and even as a rough guide as where it could be heading. And if you do start see people get in there and start selling, you know that we're not the only ones looking at it. Well, sorry, I won't be the only one looking at it. Um, so that's what we're trying to do, ideally, with when something's moving to a new high. If you've got something that's moving into a resistance zone, it's pretty clear. It's a previous level. It's probably going to act as some resistance. You're probably going to find some sellers taking some off, especially if they're sitting, if it's had a good move. And that's one we'll look at. I think that's with Galaxy as an example, just a different way to attack it. But with this, with CKF, the way we attack that, you can see that that's at vertical. It's been a really strong, powerful move higher. So really, because we've got in a tad late, we don't want to give it up. We want to take some sort of risk off the table. So the way we attack this one is, I guess I could just do it slightly differently. It's a good move here, big contraction. We're starting to show signs of getting out. Actually, that's probably not the best way to do it, but that's probably not the best way actually. But we'll just draw it up so if people can understand what we're trying to do is take that volatility projection. Let's just make that a different color. All right, that's not what I want to do. Copy, paste. We got two. So what we can see here, it's sort of this type of technique is a bit how do you say, not judgmental, but it's I use it a lot. So what we're calling it is really a volatility projection of that move down. You've got that leg up, and then it's contracting back in, and just trying to take a bit of a view of where it could go. Now we could take this from anywhere. I mean, you just want to see if, for example, if a stock's, well, that's not the one I was looking for. Get rid of that. So the idea of doing a volatility projection is just getting that. You've got to move up. So we want to know where this leg is going, in that pattern, that continuation pattern. So what we're really trying to do is just take a projection of the leg from the lows, the most recent leg up. This is contraction. We've had a leg up, contraction, a leg up, contraction. So we want to see if this is where it's going to go from, where's it going to go to? And we're trying to just figure that out, but just get a rough idea, especially when it's in the clear skies like this one here. So all we're really trying to do is get that, leg up from here to here, say, trying to transpose that of somewhere where we could be heading to. So we know with this one here as an example, we're sort of targeting up towards that zone there from a base of around here. If especially when that market starts continuing and you get up through the previous highs, it's making new highs. So that leg is this. Once it gets through here, sorry, this is what we said before. We know it's continuation. We know the trend's going. It's continuing on. We've got an anchor leg here, which is down in this zone, this blue zone down here, and we know that that's where we projected a zone up here. Now, obviously, anything could happen. We could just get that push back up straight through, but that's where, ideally, the way I look at it, what I would like to do is get a zone in my head, especially when you're seeing this kind of vertical move. And you can see that big rejection candle just a couple of days ago. It rejected off that zone. We were looking at that $6 mark as a rough guide. We just put a partial exit at 5.98 because I'm always happy to take something off the table there. Just trying to get an idea. You could have even made it a tad higher. I guess you could make that type of zone going from there, and you really could have got a bit more out of it. But I was happy around that, even the $6 mark. took some up at 5.98, went up to 6.34, I think, and then it's just drifted low. It's about 6.15 thereabouts today, so it's just back above $6. But that's the way I don't mind attacking it. We're sitting on a handy little profit. You know, we're in clear skies. You don't know where it's going to go, but the probability as it starts getting stretched, and we're this is where stochastics, I use them, and it comes in a bit handy, is just with when you're in the clear skies, it starts getting stretched up that zone. If it starts hovering around there and it's gone vertical, it's had that big rejection candle off what we saw previously, it's starting to head up again. I'm happy to take something off. Always happy to take half a position off, and then just you can let the second half run. I mean, you can have your stop quite wide. You know, you can have it just above break even to make sure that if the second half comes all the way back, stops out, retests this breakout level at 535. Okay, we might be out. It may turn around and keep going, but at least we can reassess it because that's quite a deep correction. Then you're probably looking for, if it pulls back, we might be looking for this type of action, and then we re-enter through here. So there's nothing wrong with that. We don't even know if it's going to test all the way back down. So I think that's quite a good correction if it does. If it's a strong market, you wouldn't expect that to correct. You'd expect it, more of this type of action, maybe some consolidation, start building, and then going again. So you'd expect, that not to be as deep a correction. Pull back, only minor, because there's still strength in that market. People are still quite positive and get that, that extended move higher. Does that make sense? It's just one little technique to use, your volatility projections. So you've got your projection, you've got that leg up, it's got that correction, you've got that secondary leg up, and you're looking for the next leg. So you're trying to take advantage of where it's going to go. You may be long in here, you may be long from here. Just trying to get an idea of projecting that leg up to give you a zone of where to attack, especially when it's in clear skies. It's not so important when you've got levels you're going into, previous levels where there's been a bit of action. But it's just a good way to get an idea of where we could be heading. And then if you see the price action start to fail, you see the few key signs of sellers stepping in, yeah, I'm always happy to take some off, especially if you're sitting on 10, 15, 20% gains. Anyway, let's kick it on. So any questions on that one there, CKF? Yeah, that's a good point, Susan. I can't, actually, I can get 30-minute on a different chart. So we'll go here. I'm guessing you mean CKF, okay. So that's the daily chart there, extended move up. It's probably, look, it can keep going high, 620. So we still got half running. I just never know where I put my stop. I'm probably happy just to drag that higher, drag it up to here, probably 540. We're locking in some gains there. Go to an intraday, look at the 30-minute chart. It's probably easier. Much of the muchness. You can see it's holding higher lows, even on the 30. So even if you had your second half just below 580, I think we just moved it to below 580, somewhere around there, just because with that on a daily basis, you get that big push up. It rejected into the start of the next day. It is holding another higher low, but we could be making on an end of day basis, a daily basis, we could be making a lower high, in which case you'd expect 580 to be targeted, and it's going to take out that little high. Well, it's not really a high low, but that level there at 580, you'd expect that to be targeted. If we can't get up through 634. So, and again, it's the steepness of that move up. It's a bit different to sort of this grinding move higher. You can see as buyers start to think they're missing the boat, it starts accelerating a bit of contraction. So after acceleration, you typically see a bit of a lower high, a bit of a washout, take out some of the late buys, and then maybe it can keep going. So if that's the case here, if we have got that rejection up towards 635, we may be seeing that lower high build, a bit of a washout, like this type of price action, a few days of that, where we can always reassess it. Nothing wrong with reassessing it. We book some gains and then away we go. All right, let's kick it on to the next one. Let's look at Galaxy. Now, this is just what we said. So with CKF, we'd attack it one way. Galaxy, we're happy to, because it's with CKF, it's into new highs. So it's like Devin likes to say, everyone's a winner. at those levels. So it could just continue on. You don't know what's going to happen. The second leg could go to $7, $8. We don't know, but we're going to give it a chance to run. But that's the idea. When you've got half, you split your positions in half. This is a technique we like to use. Split it in half because you don't know if that's it, and it rolls over from here, and then you're holding your whole position. You've missed the highs. It could roll over and just. And I'll show you another one in a minute. RFX, which is we did get out on the highs using the volatility projection that just rolled over from there. I don't think it's looked back since. Let's go to Galaxy. Any questions, guys? Shoot them through. Otherwise, I'll keep jabbering on. Just keep going. I don't mind a bit of a chat. Ask Susan. All right. GXY. There we go. Oh, better get the chart up then. So this is one where we have discussed. Let me just delete some of these. Now this is pretty much, we were just talking about this yesterday. I think we were talking about this yesterday or maybe the day before. Galaxy. So what we're seeing on this one, we've got in through the break at, I think we got it at 537, just a touch below, or 37.5. And this is one, I think you were asking just before, Susan, this is probably a little example of preempting that move. Because what I like to do, I've got to try to draw it up. Another entry technique. I mean, this is just a technique we use, different types of entries. I guess it comes with practice, comes with experience, it comes with just a bit of study. This is what we've learned. But when we've seen this, so this is a great price structure. We've seen that contraction lower. The overall trend has been, you can see you got that nice strong move higher, and then you see that acceleration, that lower high, that contraction building, another acceleration high. Then you got a strong move. Strong contraction lower, you can see lower highs building, lower lows. So if you're looking at this and you're expecting that weekly move to continue back up, what are you looking for? You're looking for those that failed like we've seen in here, all right? And we're looking for the price to come out of this contraction. So we're seeing, this is pretty much the first sign just in here. You're seeing a double bottom. It's pulled back, made a higher low at 30 cents, tried to roll over again and retested 30 and then rejected it. And that's when it's broken out of that contraction. So what we're really looking for, when you got nice clean price action there, we're looking for that push up, broken out of contraction. You can see that move down. It's pushed up out of that contraction zone. And at this stage just here, we don't know what's going to happen. It could just as easily go into longer term consolidation. You can see that previous high. Oh, we should put that back in. Previous high just in here. We just draw that up quickly. So you don't know at that stage. We don't know what's going to happen. We don't want to try to just buy it, and because we can just be stuck in the consolidation phase between, was it 30 and 38 for months? You don't know what's going to happen. So we're looking for a further sign, and that's what we got there. So we've seen that higher low, which is just evidence of buyers stepping in. You got that good strong day higher, straight up to 38. That pullback, you spend time. If it was a bit weaker, you'd expect it to roll over and probably retest down here at 30. And if it's just going to go into consolidation, bouncing between those zones, we saw that high low build, and that's what we like. So that there, we were happy to take through this. We've got 1, 2, 3, 4, 5 days. 5 days of just sort of bouncing in a really tight range, and then on the fifth day started pushing out. So we're happy to take it through. Take it through 37 on 37.5, because just a break of that little candle. If you can see that doji or whatever you want to call it. I'm not up with my candle terminology as much, but you can see just that that's sort of the key level. So we were preempting all this price structure. So you got a high low building. We were preempting it breaking up through 38 at 37.5. So we're happy to take that as opposed to just buying it at 38.5. Say when you have got more confirmation, it's just that's quite a strong move for us. We don't mind that. The likelihood of it hit 37 and then pulling back is getting a bit low, because you can see that great price action holding higher low, especially coming off this double bottom. You expect a bit more of a washout or retest of highs, buyers to be attracted, which it was. All right, so what we're looking at here, probably not as extended as CKF, but it's looking good. The difference is it's not in the clear skies, so we're going to be butting up against some resistance zones. It's pushed up through one here. So it's pushed up through that, what was it, 43 zone, and we pushed up through there. You can see that it's quite a accelerated move higher that day, a couple of days ago, when it pushed up to 48. And that was, it's not a clear cut high or low. It's more of that zone. It's, this previous zone around 48 to 50. We were looking at it there, maybe to running out of steam. And again, that comes with the fact that it's starting to get a bit stretched. You can see that with the stochastics. So again, like we said before, viewing the stochastics is, we don't say it's overbought, so go and sell it. It's more that it's stretched. The probability of it continuing is lowering. All right. So taking that into account, the probability if you bought it up here that you're going to have a big pullback before you're going to at least take a bit of heat if you bought it up at this zone. I mean, that's what you use in the stochastics. If it was coming, if we were trading up at that level of 48 and it was somewhere around 50%, okay, no problem. It could just keep blowing straight through that zone and pushing up towards another one, 54 or even higher, before it starts running out of steam. But just see that when they come into a level, and you're showing signs of whatever momentum indicator you look at, of it being a bit stretched, overextended, it just means the probability of it continuing is getting lower. All right. So I hope that makes sense, but that's the way we're viewing it. So you're coupling that sort of zone with that stochastics when the market is looking to get a bit stretched on price. So really, you probably expect a bit of reaction off that zone. So in essence, what we were happy with is just taking some off. Locking in gains again, we're using that, especially when we saw, these few things, these few indicators coupled together, taking some off. I mean, if it blows straight through it, we've taken partial profit, it's not going to hurt too much. But there are times we'll show you just in a second where we do that and it just rolls over. And you get lucky enough to get it just a couple of cents under the high, and then bang, it rolls over from there. So yeah, that's another slight, I guess, a different variation, just to look at different scenarios. Just try not to, this is a different technique. Obviously, when you're coming into a level, I like to use a stochastic and this and look at candles. We've got a big rejection off there, and the next day we're happy to take that at 40. I think we got 46.5 where it was trading, and you can see that with that. I guess it did open, traded down, and then push back up to the close. And the following days followed yesterday with a bit of rejection there. I think, where is it today? I think it's just popped up slightly. GXY. Let's take a look. Yeah, so you can see that type of price action there. All right. So that's another way to combat something that's actually coming from a low and it's got to try to get through zones. So it's probably not going to be as fun as ones that are just going to new highs, as much excitement. The ones that go to new highs, really, there's nothing to combat. So you have to try to pick out some levels, or you just watch the price action a lot closer, see signs where it's getting a bit stretched. You've got that, even here, you've got that vertical move over a few days. The gains you've put on from 38 up to 48, 10 cents has been over a few days, rather than, I guess, this sort of appreciation. It's popped up, consolidated. So you're just getting different price action. And it's always good to take into account what's happening there. All right, let's just tick it over to the last one we just want to kick off. But this is a previous trade from a while ago. We'll put up the chart. Actually, what I'll do, I'll pull this up. This is, hope we can see that there, guys. So this is a chart of a previous alert. I'm just wondering if there's a better way to show it. But anyway, you can see this is an alert. So we got in our entry is around 40, I think, 40 cents. And we wrote that up. We'll get that up. I'll just show you so we wrote that up to 65. I think we eventually got out at 65. So that was the final exit. I don't know if yeah, okay. So we got a previous partial exit around that 50, 51 zone. And that was just up at the highs. We're sitting on good gains by then. What's that? It's about 25%, I think, thereabouts. Yeah, 25%. Sitting on a 25% gain, quite handy. So that was, we're starting to edge up into that stretched, you can see, at that stage. We're getting a bit stretched up there. The market did just power through, which was good. And I guess there's another reason, just there's a different type of price action we can look at, which is really just here. You can see that push up. It's had a couple of down days, but it's holding lows. It's holding that 43 zone If you can see, we'll get it on a bigger chart. Let me just get that up there. Oh, let's just be 1 second, RFX. So any questions so far? Is it making sense? Just different styles to attack. Actually, just minimize that. Now, was that the? Just let me check that and make sure I've got the right zones we're trading in. 53 here. Where's that? I think that was that move up from 20. All right, so that's it. That move up. We entered back in here. Yep, that looks to be right. So we can see a lot of price action after that. Oh, let's just stretch that out, get a lot more in there. All right, so we were 40. So firstly, that entry through 40 was really just, off these high lows. You can see that there. It's quite clear. You've had this sort of run up through here. We've had that push down. That was more preemptive off that that level because you figure once you hit 40 in here, it's just starting to break out. So happy to take that because you can see that contraction right into a point. So happy to take that. Risk was quite low down here, or even I think it was down here originally at 36 from 40. Not a lot of risk in it, and you got that move up. The difference in this type of trade was that once you got up here, prior to punching through that 50 zone, 52, you got this type of price action. It's really just bounced around. So I spent a few days just consolidating in here, and that was just below that high. So that was, in essence, when you get that type of price action, it's not just bang, bang, bang straight up. It's not straight up into a zone. You tend to get up, pull back, maybe a bit of consolidation. It's only on a minor scale, and then you get that punch. A lot of the times you just go straight through a zone rather than a pullback like we saw here. It tends to build the energy just below, and then you get that extension straight through. So that can happen a bit, and then obviously you get that, like we can see here, that retest, which is always good to see. But so that's different type of price. That's just a little heads up to that, I guess. A side note, if you want to call it. Just minimize that. Yeah, okay. No, good idea, Paul. So should we just check that? At that stage when we got done at 60, 65, I think it's through here. All right. It's really just raising your stops. And this is when I don't know if we discussed it on another video. We call it the anchors, Michael. So what we're looking for is, a trend up. I think it's called the Dow theory. Dow theory, you get higher highs for an uptrend. So what you're trying to do, each time it makes a new high, it's confirmation when it breaks out through there, through that high. All right, so what you're doing is just lifting your risk. So if we got it in here somewhere, we had that move up, we had a contraction back, we're expecting another move high, but at the moment, our risk is down here. It's broken up, we got that leg up, we're still holding risk down here. We may have entered somewhere in here, preempting, so we got that leg, which we expected. That pullback, we expect another one. As soon as it goes through this, the high, makes a new high, we raising our risk, and so there we're locking in the gain there. Same type of scenario. So that's what you're trying to do, and it's just the opposite for a sell. The sells tend to go a bit faster, and they can get a tad harder because when they fall off a cliff, they just go bang, and sometimes they just don't make those lower lows as cleanly. But that's the way you ideally want to attack an uptrend. Just raising your stops, you get that breakout at the top, and then raise your stop. So in this one, if you're just following the trend higher, and that's where, how would I say, that's what you're trying to do. So ideally here, we would have raised our stop, I'm guessing, just to below here. Once we got that breakout through, we raised our stop here. So we've locked in a break-even trade at the very minimum on the whole lot. And you could do the same. We're taking a partial exit here originally. So it only left us with half a position. And that's where, if you can go back to that picture, if you can see there, this is where it's going to new highs. So we used that style of using the volatility projection, which worked out really, ideally, it worked out beautifully. And you could see that if we just draw that leg in. So we've had a high up to here. Just change it to a nicer color. So that's the first, ideally the first leg up, and that's what we're trying to measure. So what's it at that stage? We don't know where it's going. If we could just copy that, copy it. Ooh. All right, let's start again. I think I deleted it instead. Yellow. Okay. Copy, paste, and so this is what we did. And really, you've got to take it from the low. So that leg's contracted. You've got it from the low. We've built the high low. We've traded off the high low, but we're taking that projection. So from the low, again from the low to the high, from the low to a potential high, and we had that earmarked around that 65 mark. I mean, that was spot on in hindsight. We didn't know that was going to happen, but that's pretty much the reason why we got out of the second half. You know, sitting on a really good gain, really happy with it. That was clean price action. So you'd expect past clean price action for the price to do the same thing. And if it was just as clean, we were happy just to take that exit somewhere around that zone, which we got out at 65, and then we started seeing a lower high build, and it's been grinding lower ever since. All right, so that was the same type of style exit as CKF, because we had no clear resistance zones to head to. It wasn't really targeting any particular area. It was just, we're just trying to find a zone where we would probably be happy to take a target. And we could have, in hindsight, I mean, it's hard to say now, we could have held that first exit. We could have taken this first exit up here at 65, locked in a bigger game, but then you would have got done, because you'd probably have to have your stop all the way back here for the second part. As it's pushing back up, you probably want to raise your stop, because that's a good correction. A good sort of correction like that is not showing a lot of strength, and it's come back down to, it's taken out a few little lows. It's not showing a lot of strength in my book, and I probably would have been thinking at that time I'd be expecting a lower high, so I probably want to raise my stop in the second half, say 51. So maybe stopped out at pretty much exactly, so probably would have got exactly the same result by attacking it slightly differently. But I do like to use these volatility projections. I don't know if you can use, you can call it Fibonacci. Some people use it Fibonacci projections just to get an idea of where it's heading. But I used to use the previous leg up, use that as a bit of a guide, and then start, looking at price action, looking for prices to where run out of steam, raising your risk. You can lock in. If you've got your first half taken off here, if we didn't have our first half, we could have just raised our stop, tightened the stop on half, up here, until it hit 65. If it didn't, if we tightened it to here at this stage, it sort of didn't hit 65, hit 62, roll over, stop us out at that first half, so be it, and then ride in that second half and see what we can get out of it. Does that make sense there? Does that, what we mentioned just before, Michael, make sense with the your Dow theory? The way we try to attack holding stops, raising stops. I wonder if I can get that up. That's gone. So that's it. I think it's a good idea when the best way to attack any market, I feel, and especially when you're sitting on good gains, the last thing you want to do is give up. You never want to give up some gains. And sometimes you do. It's just the way it goes. But I've always learned and been taught to try to split up any position in half. Or you can trade. I mean, when you trade futures, you can trade in contracts. You can trade 2 contracts, 3 contracts, 4 contracts, and just attack it at different. There's a great little video by Davin. I don't know what it's under. I'll see if I can get a link and put it up. It's on YouTube, and he's trading. He's got a good explanation of the yen. Right, and the way to attack it, he might have a few contracts, a few mini contracts, however you want to trade it, and then just attacking a leg. So you're trying to attack a specific leg. All right, you got your entry. He might have had, say, I think it was a short at that stage, selling off a lower high, entering, and then just try to attack it. Each time as a pop up, take off one, get that next projection down, pops back up, take off another half, or another one contract, but just edging out like that. And that's the way you try to maximize. And on the last one, you're just trying to maximize as much as you can, give it a bit of room to move. But that's what we like to do on our stock positions. Have half, take off a good gain on half, and then if it keeps going, so be it. If it doesn't, then you've at least booked a good little gain on half. You're going to have a profitable trade, and see if you can really wrangle another, really get out as much as you can on that second half. No probs. So yeah, there's sort of two ways we look at it. I mean, if it's going up into a zone, try to see what the market's doing. Is it looking to get stretched? Has it been a good vertical move, big strong move up into that zone? And then what should you do? Okay, it's always probably prudent to take half off. You can just leave it, but sometimes they turn around and reverse straight on you and get you stopped out. So what you were sitting on a gain, you can be turned around and wiped out at a loss, a small loss. But depending on the way you attack it, we always like to book something. And I think if you consistently do the same thing, it's going to show up in your results, and you're going to be consistently, booking some profits. So, does anyone want to look at something before we call it a day? If there's any codes or anything you want to chuck up there, let's just quickly click over to. That's a five. Let's just go to 5-minute chart on that. Just drill right down. It's whipping around a bit on the old ASX. Starting to get a bit oversold here, so maybe it's a tipping point. Who knows? Anything you want to look at, Susan, Michael? No, Paul's probably not in there. Anyone that's in, chuck in a code if you like. Otherwise, we'll just see what the market's doing before we tie it up. We got that. I think we alerted this as a potential short on Seek. Was around this market. We had just to go through that price action if we can. It's looking good. This is where we're alerting it to short, and then I think it was somewhere in here. It was getting. You can see it was up near. That leg up was starting to look a bit stretched. You've got the momentum's lower. You've got a lower high here, so you're expecting. This goes back to the Dow theory, I guess. Lower lows, lower highs. So we're expecting, if it was going to continue lower, we're expecting this to be a lower high in the daily. And we are getting stretched. You can see that leg's getting stretched. It's getting a bit overbought, and we got nowhere near that 1570, that last previous lower high, sorry. So we're expecting, continuation down, something like that. That leg down, we're looking for that leg there. So problem is we've got that little washout. So what I'm looking for now is really if it can pick up, build that lower high around the 470, 480, and then once we start seeing it head south, we might jump in. But this last couple of days were quite solid too. So it's yet to be seen if it does that. Like this price action, you can see that previous price action, a couple of good days down, picked up, took a bit of a while. It did build that lower high. You can see below 1590, and it didn't roll over quite strong. So we're hoping for that price action to target down to 1380, even through that. But we'll see how that plays out. ASX 200, let's take a look. And we're just on that, weren't we? What do we got? Yeah, it's hit a wall at 54.50 up at that zone. Yeah, that price. I mean, sometimes you got to discount what happens at night, but going into the close early hours of this morning, it sort of picked up. You got that wash of the highs, just taking out. You know that people are probably going to be buying it through there, just expecting to continue up. They washed that out, come back down, wash down that major zone at 54.32, and it's just picked up. So it just looks more of choppy action today at the moment. For me, if I was expecting this to continue higher today or into tonight, what I would like to see, draw that up, it's getting to, you can see that the market's looking a bit stretched. It probably hasn't powered lower, and we haven't had the move down hasn't been too much like this. I'd like to see that, but even if it's not, maybe a spike down, a rejection of some lows, and then see it start picking up, maybe with some higher lows. Well, it didn't come out well, but I guess you get the gist. Quick fingers. There you go. You get the gist there. So we want to see, maybe a retest, that high low build. Does that make sense? So it'd be good to see that type of price action. If we can build that around here, you can see that start lifting off oversold. Maybe it's going to continue on up. I don't know what the 30 minutes doing right now. BSA, we'll take a look at that, Clement. Yeah, so if we get that type of price action, it might take a time just to play out, but that would suggest that we're going to continue on up with that 30-minute chart, or this could just be building a lower high on the 30-minute and roll over and retest back down towards that 53.90, or even a bit higher than that. We'll see. BSA looking good. That doesn't look so bad. 147,000. It's a small, is it? Just get that on a bigger chart. All right, just starting off. All right, starting to lift. Okay, the good sign off on this one. And this is great that you're seeing this here, Clement. Yeah, no, I think that's it's good to see some charts that you're sending through, Clement. They're really good. I think you're seeing some good signs, and you've obviously got a plan of attack for it, which I think is the most important thing. Don't just get excited and jump on. You've got a plan of attack, what you want to see, and if you don't see it, there's nothing wrong with just leaving it. You can't get hurt by being out, but if you sort of get excited, jump on, and then straight away it retraces. I mean, you can sit there and hold it, but you don't know how long you're going to hold it. It could work out. It could just do nothing for a long time. Then you're wasting your capital. But taking a look at this one, if we can draw that out just quickly, it's probably no real need on the monthly, but you can see what I'm talking about. 1, 2, let's get rid of red, light blue, let's make it smaller. So what we can see is obviously the thing that stands out the most is you've got that major support through here. You've got another, I think that's what we looked at. Let's take that out. It's a pretty stupid line. Through here, it was at 10. The good thing is, what I'm seeing on the monthly at least, is that we've got through that 30 zone. It's really picked up off that level. And we're starting to show signs of it continuing, even straight up through, I don't know, what's that, about 37, thereabouts, straight up through there. So we've got some good signs showing. I'd like to see a bit more contraction, like you said. Sometimes it just doesn't happen, so just be wary of that. It's hanging around that overbought mark on the monthly. So going from the monthly, I'd expect a bit of contraction, build that more major higher low, and then look for your entry. If we just go down to a weekly just to see what it's starting to show, I mean, even on the weekly, that move up was quite strong last week, sorry. See what it looks like on the daily, because we know we're up at that, what was it, 30? 30. So that 30 is shown, that's where it's resisted. It's pushed up through, pulled back. We might just be making a lower high here, who knows, but that move up was quite strong as well. On a daily basis, the daily's still looking good. I mean, if you draw it up on a daily, just get some bigger candles here. Just taking a look at that daily snap. There's my snap. The one thing I think which is a good just to keep an eye on is the where it is just here. Yeah, it's just sort of hovering around that overbought. So buying it here, and this is where people could get caught with a wash. Buying on the break even through here. For me, that to continue, your stop is to be here because you don't want to risk too much on that because it's stretched. It's a way to get in and not miss a potential, good move up. There's nothing to say that it can't go from overbought to even more overbought. But the risk for me on that one is not. I don't like those type of trades. I'd rather be patient and see it, like you said, pull back. You still got this trends going higher, maybe pulling back to 34. It could just work its way, back, minor lower high. Whoops. Come on. Build there. If you can get that type of price action, you can really minimize your risk quite easily. If it does pull back to around 34, 33, and that still keeps the trend high on the daily is still there, still high. Sorry, the trend high on the weekly, I think it is still strong. So the weekly's picking up. I'd rather, yeah, I think that would be great. If we could just do that, only because of the daily chart. That week we could just push it up and through 37, away we go. But definitely that price action is looking good. Spent a lot of time. We're starting to break out through this 32. You see that push up, another push up, deep contraction down to 31 after this little high at 34, and it's pushed straight up. So maybe similar type of price action, still within these highs at 37. And I think that if that happens, that will take us up and through 37. Either way, it's looking good. Anything else just quickly? So I hope that helps, Clement. All right. We'll knock it on the head just there. Again, thanks for joining us, guys. I'm enjoying it. I hope you all are. And hopefully we get this little issue with the certificates through, what is it, Apple sorted out quite soon, and we get those push notifications back up and running again. So it is a bit of an issue, but it's not something it's not fixable. But Apple, I think they tend to be manipulating the market. They've got it pretty much covered. And there's no reason they can do whatever they want. So if they change something, there's no reason they have to tell anyone. It just would be nice to know this in advance so we can try to deal with it. But it only started happening yesterday, but we'll get that sorted out ASAP. Anyway, thanks for joining us, guys. We can see the market is hovering up around at 38, but I'll sort of hover around these levels and maybe pick up again tonight, but we'll see. If you've got another topic, if there's something you want to talk about for tomorrow, send it through to support@tradesetup.com.au. Something we can have a good chat about. Otherwise, we'll come up with something and we'll inform you again tomorrow with an alert. So just keep an eye out. If you're not seeing anything push through on the TradeSetup app, just drill down. You'll see it. It's actually coming up through the app. You just have to open the app up and have a quick look. If you're not getting the alerts through to your lock screen, but just keep an eye on that. Anyway, thanks again, guys, and we'll speak to you tomorrow. Bye.